Hey there, and what's going on YouTube? Welcome back to my YouTube channel. It's Liana Samwinger and I'm back with another video. So in this week's video, I'm going to be doing a trade recap on Euro Kiwi, which banked me and the team 3%. Now, although that doesn't sound like quite a lot, there was a lot of key lessons which I want to break down with you guys. So if you find that you're taking a lot of value from my videos, be sure to leave a subscribe button and like so that you can show support to my channel, so I can keep releasing a lot of videos which can add a lot of value to your trading. Now, Euro Kiwi was a beautiful position, which we took a go-to setup, but there is a lot of lessons within the trade. So I'm going to be breaking those down, and be sure to sit back and enjoy the video. So now we're on the charts. I just want to break this position down with you guys. So I'm going to start off with going over the daily structure and then heading down to the actual trade and actual entry, position, management and all that sort of stuff. So going on to the daily time frame, what can we see here? Well, we've got a typical impulse, correction, and then we were looking for the next impulse to then take this to the downside. And we were looking at these lows as a good reference point, but then first we had to reach this target here. So we were nearing the top of the structure, and within that we had another channel forming. So we were looking to see if we could see any rejection from these parts, and the first flag to then take short as a go-to setup, which I already mentioned in the intro. So that's the daily structure you can see. And now heading to the hourly, is there anything else which we can use as reference, or even the 15-minute, right? Well, you can see here we've got a clear retrace, but price was also forming an ascending channel. Depending on how you view this, we were seeing a channel form. So this is what the channel looked like, and it was a very neat ascending channel reversal structure. And we usually see ascending channel reversal structures at the top of key value areas where we're looking for the reversal. So price did break out ever so slightly, but we got a retrace straight back into the structure. And if we play the next candle, we saw it was another bearish one, and we were looking to see if price broke this structure. So if we just extend this, eventually price did break, but I wasn't looking to take this at the break of the structure only, because if we look at the position, we would have been having to get in with, let's say, an 100 pip stop loss, and 100 pip stop losses aren't within my plan to take. And let's just look, we've got 1% to the bottom of this structure. I mean, yeah, it's something to deal with, but it isn't the best. And then you can see to the low structure, it's only a 4.6% trade. Now that is good, but 100 pip stop losses are just way too wide. And especially when we can get in tighter. Say we got in at the retrace, which wasn't within my plan to take, but say we got in at the retrace, it would have been 60 pip stop. So still very wide, since the impulsive candle was a very strong impulse. But to the low structure, we would have had something like 8% if price did complete the full move. So all I was looking for, and you can utilize forecasting, is for the first flag. And members, if you did take this trade, which I know a lot of you did, you'd have seen me forecast for the first flag to then take on the break. So what would this look like in live action? Do we have any examples of where a 15-minute flag did end up pushing down? Well, we could look at it like this. So this structure here, just be looking for something similar to this. And then if we get the bars pattern replay tool, you can see how these positions can be quite lucrative. And for the even bigger move to the downside, which we are planning for, you can see how these positions can be quite lucrative, and they can end up reaching the bottom of structure. Even if we get huge retraces and huge pullbacks, they can still end up completing the move. So that's what we were looking for ideally. The 15-minute flag as then a confirmation for the continuation of the move to the downside. Now if we play price forward a bit, you can see we're starting to just correct a little bit, and then we get the impulse down. So how was we taking this? So if we look at our risk reward tool, we had our entry order set below the low of the flag, and that's another key tip in itself. We always have our entry order set below the low of the flag, because sometimes what price can do is it can be very steep and then it moves down to the low, and then it can just keep going, and then in the end it can move down. So this could become a sideways channel, hence the reason why I set it below the low of the flag. Now if we just unlock this, our targets for this trade were the bottom of structure, and it could have been something like a 7% trade if this move did complete itself. It could be something like a 7% trade, right? So after our entry order was set at the low of the flag, we then will just continue price. Price did hover around for a bit. It did go into minus a little bit. It was just hovering around entry point. And then we start to see some real impulsivity to the downside. And then we got a good amount of candles that were bearish already. And at this point, we're looking to move our trade to break even. So our stop losses were at our entry point by then. So there was another scaling opportunity, but as price did develop even more, we were not liking the look of the idea. And in fact, we did even have an entry order set below the structure. And you can see this sideways structure starting to form. And then price just started to form an extension to the upside, breaking above the pattern. And then eventually we did start to drop out. And I know many people in the community did take this to the downside at the break of this little ascending channel. A lot of people I know did take this on the break. And then you can see how this trade just starts to complete itself. And at this point, we're happy to move our stop losses. And I think at one point we locked in 3%, which we then got tagged out at. And it was by a wick. So it was probably at this point here when price did end up breaking this low. We just moved it to the swing high, right? And then it was this wick here which tagged us out. And we were very aggressive in the management of this trade. But a lot of people were conservative. I know some people who got out of this trade for about 2.5%, which would have been above this high, which is another alternative form of management. But when you're trading pairs like Euro Kiwi, pairs like Kiwi Swiss, pairs like Pound Swiss, Pound Yen, you have to be very on the ball with management, because the trade can move a long way to the downside, right? And then it can pull back on you aggressively and form, deeper structures. And form deeper structures before the sell-off, like we saw here, right? If we just grab this piece of price action, say we got something like this form, right? You don't want to be holding this whole pullback, because say price was running at, let's say 5%, and then it pulls all the way back to 2.5%. Are you really willing to give 3% back? Are you really willing to give back 3% to the market? Well, ideally no, because that's a lot of room which you give to the market, and sometimes it can be just a little bit too much room to give to the market, and you can end up being punished for it. So price did tag us out, and then eventually just started moving to the upside, and even coming back to these highs, current price. So we were watching this low very closely. We were watching this low to see how price reacted. And if we saw if we just replay price back, so if we just replay price back, we saw price was approaching this low, and price didn't even tag the low completely, and then it started pushing up. So this was a clear sign to us. So as price formed this nice little descending channel, which was a form of a reversal structure, similar to what we got here, but just on the inverse before the mover down. we start to get this descending channel form, right? And that's a clear indication to us that price is gonna end up turning. So what we had here was just this descending channel form, and price did end up breaking 3 bearish candles. But I said to myself and I said to the team, if price ended up just forming a retrace candle back into the move, we're gonna look to keep our stops very aggressive here. And that's what we did, right? And as price formed a nice little retrace candle back into the move, this was a clear sign to us that we should be on the ball with our management and just a little bit more aggressive. So going back to current price, you can see our price just did end up moving higher, and that's a key lesson in itself. You need to know when to be aggressive with management, and you need to know when to be conservative. So I would class myself as quite a conservative manager of my positions because I like to give price room to breathe. Say this did continue to the downside and this just did complete its move to the downside, then we would have a lot to bank on that position. So you need to know when to be conservative, and this comes through back testing as well. If you back test the pair and you know it's prone to have deep pullbacks when your trader is running insubstantial profits, you need to know how to counter that. So how do we counter that? Be more aggressive in certain areas. So as we approach this low, be more aggressive in these areas of where the low is. Because say price did just retrace and this acted as a double bottom, in which it did, then you would be getting out with some profit on the position that you can look back at and be proud of yourself and say, well, I managed this trade according to my plan and everything in itself was good. So that is Euro Kiwi. That is the position which the team took. And I'll join you back in the outro. So that is it for today's video. I hope you guys enjoyed that recap. Just giving you guys an insight into the management, into the entry, and just a bit more into the strategy which I trade. And if you are interested in learning the strategy, be sure to join my community. The link will be in the description. It's totally free. All I do is post analysis, post weekly breakdowns, nothing which you should be scared of in any way. So be sure to click the link and I'll be posting in there just trades which I'm looking at, setups, and more insights into the strategy. Now that is it for today's video, and I hope you guys enjoyed this. If you did, be sure to leave a like, or if you didn't, leave a thumbs down and tell me how I could improve this video. And also be sure to leave a subscribe to show support to the channel. Thank you guys for watching, and I hope to see you guys in the next video.